The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and I hope you all have been having a great time. I've been out spending a little bit of time with my daughter. I'm back on the show today, and glad to see you. And so catching up, and of course coming back to a fun market. I already hopped in on a trade this morning, hopped into a little gold trade, and made some pretty decent return on that, and just hopped out of it. So we'll see how the market ends up for the rest of the day. But the markets so far are at least happy that the Fed continues to pump money. And they did add a little, thing in there where they said as long as the unemployment rate stays above 6.5%, they'll continue to leave interest rates low and probably continue to pump money into the market. And they'll be converting that $45 billion and continuing to buy more treasuries. So it's going to just keep going and going and going. But anyway, so let's go ahead and check out where everything is at right now. We got the S&P up 5.5 points. We got the Nasdaq up 2.75. We got the Dow up 31. We got the Russell is up a mere 40 cents. We got gold up $11.20 right now. We got copper up let's see, about 0.83, so almost 1% right now. We got silver almost hitting 2% up for the day. We have corn down $5. We got soybean up $5, and we got oil up $1.50, a 1.75% increase on oil right now. So the continuing devaluation of the dollar causing an increase in the rise of the commodities like oil. And looking over at natural gas, it is down a little bit right now, down about 0.76%. We got the euro dollar is up 81. We got the pound dollar up 48. We got the Aussie dollar at 44. We got the U.S. yen up 67. The U.S. franc down 76, and the U.S. Canadian down 34, showing the dollar getting pounded on the weakness there by the printing of the dollars and increasing that. So anyways, not really to be a big surprise. Everybody did expect that the Fed would continue to do what it's been doing, would extend the lowered interest rate, and would also add in language to keep, some sort of version of Operation Twist going, and have been looking into that. And so they are going to go ahead and extend to keep basically buying long-term treasuries and, putting that into place. And so you can check that out. I posted the link over in the Tiger's Den a little bit earlier. But you can go in and look at the conference and the statement over on the Federal Reserve's website, and that's federalreserve.gov. And you just go over to their press conferences, and you can see their most recent press release that they just put out. And so that way you can read the details on that and sort of know, what's behind everything. So you're not just doing it, but they are, again, expanding their policy right there. So we'll go into a little bit more detail on the exact expansion of the policy here after this first commercial break. But first, like I said, we like to get you caught up on everything that's been going on. And so we just talked about where the market's sitting at. And we're going to go ahead and go to what's been going on across the board. Like I said, I took off a little bit of time because we really didn't have a whole lot going on until, today, right? So as everything started picking back up, we had a couple reports come out like trade balance and things like that. But overall, there's not a big thing. Basically, the market started rallying yesterday just on the expectation of the Fed funds announcement, which it got. And now that it's got it, it's made a little bit of a pop there. And, the small caps really have been slow to react. If we check that out, it's sort of an interesting thing to look over at the chart on the small cap 2000. And I'll go ahead and pull that up and show it to you over here. We'll go in and look at the small caps. And they just really have not been near as impressed with the move today overall. So they just, basically built it in, and that expectation was built in. And on most of my positions, I went ahead and took a profit not too long ago because, again, it was expected. So the market did what it was expected to do. It rallied up. But, as far as how much more do I expect it to continue rallying, not a whole lot more. And so I went ahead and took my profits right before the beginning of the show here around 11:50 and closed that out. And expect the markets to pull back now that they've got what they expected. And we ought to be seeing that go ahead and sort of fade away into the background now. And now the reality is going to come back in. We got the fiscal cliff. We got tax hikes coming. We got a debt ceiling that's about to be breached. And we got a Congress that can't agree, a president that's demanding higher taxes And he's not doing it for revenue because they've already proposed things that would actually help with revenue. He's actually trying to increase revenue spending in the fact that he wants to have unlimited, debt ceiling limit with no congressional approval. Obviously, they're not going to give in to that. But who knows what we're going to see, man. We may see some new executive orders come through. We'll be finding out really soon to see how this one plays out. But right now, no real progress coming out. Let's see. We had obviously the FOMC today, and no major reports earlier this week. Moving on into what else do we got left for the week coming up that you need to be aware of. We're going to have the LIBOR rate and the Swiss National Bank's monetary policy, basically their Fed funds rate, you could say, coming out at 3:30 a.m. tomorrow and that's Eastern time for any of you Swiss dollar traders there. And looking on over, we're also going to have tomorrow morning, we have some core retail sales, some PPI. Those numbers are going to be coming out, so let me get you the links on where to find that information. So if you are a dollar frame trader there, you can go on over to smb.ch, and you can look at their monetary policy for 2012 right there under monetary policy. You'll be able to find that information. And then for the core retail sales, and the core retail sales is basically the automobile sales, account for about 20% of the sales, but they can be really volatile. They can, sort of mess with the trend. So the core data is thought to be a better gauge because it doesn't include the retail sales. So it's the total value of retail sales at the retail level, excluding automobiles. So it's all the retail sales, no automobiles, because automobiles can sort of have massive swings. So with that, you definitely want to check that out. It's a very, very strong and considered accurate gauge of just the economy as a whole. And you can get that over on census.gov/retail. Census.gov/retail. And then you got your PPI numbers. There's a lot of good websites for that. But of course, the PPI actually comes out from the Department of Labor, and you can get their the Department of Labor's Bureau of Labor Statistics site, and you can get that at BLS.gov, and it'll be under their economic releases, and then you can go over and just click on the appropriate report. In this case, we're looking for the PPI number, and so you can get that. And PPI stands for basically what it's for is the price of finished goods. Okay. And it has to have more impact when it's released ahead of the CPI data because the reports are they're like highly correlated, and it's a leading indicator of inflation because it's what consumers are going to charge at the end. So what's sold to the consumer at the end by the producer. Okay, and then we got in the retail sales number, and that number includes basically everything. It's the primary gauge of consumer spending. It accounts for the majority of basically almost all economic activity. And it can also be called advanced retail sales. That also comes out by the census website. And you get that again over at census.gov/retail. And North American industry classification there. And you get all the information on that. And then, of course, all this comes out. And it's going to be sort of a hard time to trade. Again, this is coming out at 8:30 a.m. Central Time. And so when it comes out, it will be a little bit difficult because when it comes out, you're going to have core retail sales, PPI, retail sales, and unemployment claims all happening at once. So you could have good numbers and bad numbers happening at the same time. And if that happens, that can cause a lot of whipsaw action. It can stunt a good move. Now, if they all come in good or all come in bad, then you can have just a massive move. So just be aware that when you have that many news announcements happening at the exact same time, you're going to have all these different algo trades firing off in all different directions based on all different numbers. And it can make it a very volatile and, again, difficult time to trade in. And so, that's whenever you want to do a trade, maybe like going over. And going over and checking out several things, such as, Nadex. And let me see here. Let me go ahead and pull that up for you. And I will get that going. All right. So if you go over to Nadex.com, on Nadex, you can go in. And, of course, you can get to that, of course, from our website right here at TFNN.com. If you ever have any questions, feel free to give me a call. And number's right there on the homepage, 877-927-6648. And then on there, go ahead and click on the banner, the Nadex banner. And on Nadex, they have all sorts of very, very cool things. They got rebates and stuff like that going on right now, so you definitely want to check it out. But go ahead and you can create an account. Just click Create Account, and then you can go from start to finish in literally, less than 5 minutes. And when I say start to finish, I mean start to funded and live trading. And you can start with as little as $100 in your account. Of course, I'm probably going to put more than that in there. You're probably going to put more than that in there. But you can go in with as little as $100 on your account. So you go ahead and start that up. You can check it out. You can trade during flat markets and volatile markets. I mean, you're talking about how you can make a 100% return on risk with a 2-tick move on a trade, or a no-tick move on a trade, depending on what kind of trade you're doing. And so there's some very, very cool trades that you can check out. there's trades that you can make massive returns on. I mean, you're talking 1,900% return on a big move, things like that, and a matter of a couple hours. So there's just some really, really cool stuff in here. The binaries, the box spreads. Now, the box spreads, those are my one of my favorite instruments to trade, and they're like trading the underlying market. And you can even go into our products over here and click on demo account, and you can sign up for a demo account and have one in like less than 5 seconds. Just put in your username, first name, last name, phone and email address, hit apply for demo, and they'll get you going with the demo account. They'll send you a password. You can log in right away. And I mean, you're talking literally, 5, maybe 15 seconds if you're a slow typer, and you can get access to that. And you can go in and you can, like today, I straddled the FOMC announcement with gold. And I went in, put in orders on both sides. I'm like, hey, I expect the thing to move up. It could move down, okay? But I expect it to move up. And so I went ahead and put my orders in and all that, and I put in my take profit orders as well. And, made 100% return on risk on the trade. That was my goal. Just get in, boom, get out. And went in, took about, 15 minutes or so, and, bond, out. And that's really, what you're looking to do is go in and, you can trade non-directionally, like random walk, which is where you don't care how far the market goes or where it goes as long as it moves. You can trade neutral strategies, so you don't care which way it goes, as long as it doesn't go too far in either direction. You can trade, of course, trend, strategies where you want it to go one direction or the other. You can do swing trading between support and resistance levels. You can even go in and do scalp trading in certain methods. So there's neutral, there's trend, there's random walk. You have all different ways that you can trade on Nadex, just like you can trade anywhere else. And if you're just a futures or forex trader, or maybe you're an ETF trader like the spiders, the diamonds. IWM, things like that. You can go in here and you can trade the major future indices. If you want to get into gold or silver or copper or euro dollar, or you want to get into the the major indices like the S&P E-mini futures, but you don't have the money, or you don't want to take on the risk, or you don't feel like you know enough, this is a great way to trade this, because one, you trade with 100% defined risk. You never get stopped out of a trade, okay? Because your maximum risk is your stop loss, but it's not your stop trade. You have till the end of the day to be right, and you put up less money to do the trade. So less money, defined risk, no margin calls ever, no commissions. They have exchange fees, just like CME has exchange fees, but they don't have any commissions that you're paying. They make money on the exchange fees. They don't make money on the bid-ask spread. That's where other traders or market makers are making that money on the bid-ask spread. It's an exchange. It's in Chicago. It's registered with the CFTC, which also registers, oversees the CME, and other major, exchanges here in the U.S. or commodity exchanges. So there's a lot of good about it. And if you have questions about it, you can let me know. You can email me, and our contact information is on the website. You can call in on the show. I'd be glad to answer questions for you. But in this day and age, with things going on like fiscal cliff crisis and Fed funds easing, and you just never know what's next. You don't know what announcement's coming out of the White House in the next 5 minutes. What are they going to say? So you need something. It's a new era in trading, and you need a product that is meant for the current times. And I would definitely say that is Nadex. Stay with us. We'll be right back after this commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And I've heard a few were calling in for me, wondering where I was at. So, yeah, I had a little holiday, took my daughter out. And I visited some friends, and we had a good time out in L.A. and Anaheim, and went to the beach, and then came back. Had to put on the coats here in Texas, but it looks like it's warming back up today. So you got to love Texas, where it snows one day and it's 70 degrees the next. And so now what we're doing is we're checking out what else is going on in the markets and catching on up here. Do be aware, we do have a Fed funds rate day. It's not over. We have a little bit more coming up. And we got the FOMC economic projections are going to be coming out. And let's see here. Let's see. This report includes the FOMC projections for inflation and growth over the next 2 years. Basically, it's the breakdown of the interest rate forecast. Okay? So that's going to come out at 2 o'clock. And basically, we'll give more insight to the market. And so, you want to be checking that out. You can find that over at federalreserve.gov. And so that's going to come out at 2, and then 15 minutes later, we're going to have 2 other things come out. Or actually, at the same time, the federal budget balance comes out from the Department of the Treasury. And so that one you can get over at fms.treas.gov. So that's where you can get the budget balance report, and it'll be released out pretty soon here. And we'll see basically just where is the income, where is the spending during the previous month. And so that's it's not the highest impact report there. They're going to be looking more at the economic projections anyway, but it does have an impact on the debt ceiling and things like that that's going on right now. So that will be, sort of where's everything basically sitting at, and how soon is it going to become an issue. And then looking on forward, we got the FOMC press conference, and that's going to be Bernanke talking. So expect some more movement, okay? And it's about an hour. It'll have two parts, and it's a prepared statement that is basically read, and then and that's basically the first part, and then it's open to questions. So the questions that are asked is what can be pretty big, because the answer is not necessarily scripted. So they can cause a lot of market volatility. And the conference actually is webcasted on the Fed's Ustream channel. And so it's always interesting to have that up, and you can check that out. And that's over on the ustream.tv/Federal Reserve. But, of course, right here we're keeping you updated in real time on what's going on and how to take advantage of the market swings. But it's it's definitely one of those things. It's interesting to watch and see what's said and how what's said when the market moves based on what's said, And it's sort of interesting to watch the market as Bernanke talks. And you can tell as he's positive, it'll move up, and as he's negative, it'll move down. I mean, it's like his voice just controls the market. And anyways, so that'll be coming up here pretty soon, and you want to keep your eye out for that. And that sort of gives us, the major thing right there. We talked about the LIBOR rate. We talked about the core retail sales, PPI, retail, and unemployment claims tomorrow morning. China's going to have a flash manufacturing PMI that'll come out. You can check that over on Market Economics. It's MARKIT economics.com. So market with an I, basically. And that comes out at 8:45 tomorrow night. And that could have, it's purchasing managers and, the manufacturing industry. And that'll have a pretty big impact on the markets, overnight on Thursday night. And then we lead on into Friday morning, and we're going to have the German flash manufacturing PMI also available over on Market Economics. That comes out at 3:30 a.m. Of course, that'll have a heavy impact on the euro. And then right here in the United States, we're going to wrap up the week at 8:30 a.m. with the core CPI trade. So core CPI is coming out month over month. That comes out off the Bureau of Labor Statistics website. And you can get that over at BLS.gov. So Bureau of Labor Statistics. So that's sort of your major reports coming out. There'll be some other, medium impact reports and everything else being released. Those are your major reports coming out for the rest of the week. And there hasn't, like I said, been a whole bunch. This week, though, obviously the big thing is going to be, what we had today and what we still have coming up today. And then, of course, tomorrow morning at 8:30, when all the PPI, the retail sales, the unemployment claims, and the core retail sales all come out at the exact same time tomorrow morning at 8:30. And those are really our big market movers for the week. So sort of a quiet week overall. Leading into, coming up, not too much time left till Christmas here. Got, 2 weeks left. And not even 2 weeks. So my daughter lets me know every day how many days are left. And so anyway, so we got that coming on up. Let's check out what else we got going on in the world of trading. And one of the things I like to talk about, we went through, fundamentals there. And we just talked about, when the Fed pumps money, market rises. And obviously that was there and how to trade it. I went into and I did a trade earlier today. I was talking about on gold. Very, very simple trade. I just went in and I basically bought above the market and sold below the market. And my risk on each side was about $15 per contract, and $15 to $18 a contract. And basically, so once I made my total risk of $36 on either side, then I closed out the trade. And so it was pretty simple to do, buy it, say 20, sell it 60. So if I bought the 20, sold at 20, risk 40, then I made $40 on the trade. Basically return on my risk was 100%. Anyway, stay right there, folks. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And what we're doing right now is we're just going through different ways to trade different markets, like one of those ways being over on the Nadex platform. And we're talking about, buying, like we could go in and I had a trade on where you could buy the Wall Street 30, or you could buy the pound dollar, or you could buy gold, but you could do it all with limited and defined risk. And so definitely check that out. If you want to learn more about that, like, one of the things we were working at earlier is hop on over to TFNN's website, and you can go over, and we have, of course, the Nadex banner right there. And I'll show that to you. There you go. So, yeah, TFNN.com, you got the Nadex banner. Also, check out the Tiger Dollar Holiday Special. Every purchase, we actually give a donation to the Salvation Army in your name. Get a 25% bonus match. And you can subscribe to the Diagnostic Box Spread Analyzer. And if you subscribe to that, you'll get access to tutorials that I give you on binaries and on box spreads on Nadex. You get access to my live trading tool for trading spreads. Helps you find the right spread in seconds. And basically does all the math for you. And you get access to my deviation levels, which are very, very helpful. You can hop on there and basically let you know how far should you expect the market to move. And you get access to all that for free for 2 weeks. So go ahead and check it out. It definitely is a great way to get you started with a demo account at Nadex, and hop on over here and get the demo, the Diagnostic Box Spread Analyzer and the deviation levels. Even if you're not trading Nadex, the diagnostic levels are great for gold, silver, copper, oil, natural gas, corn, soybeans, euro dollar, pound dollar, Aussie dollar, U.S. franc, U.S. yen, the S&P 500 E-mini futures, the Dow futures, the NASDAQ futures, and the Russell 2000 futures. So if you're trading any one of those markets, then this definitely could be a great tool for you. And if you haven't checked it out, it's new, you don't know about it, definitely it is worth your time. Again, new trading area and new trading instrument. So you'll be surprised how relaxing it is. I mean, I'm trading the Fed funds rate, something that is a crazy thing to do. And I'm doing it like completely relaxed. I'm like, you know what, this is my risk, and I expect it to move. And so I just sit there and I wait, and about 15, 20 minutes later, boom, my profit's hit. I'm not freaking out. I'm not worried about getting stopped out. I'm not thinking about my risk increasing. So none of that is going into it, and I'm just sitting back and just letting my trade do its thing. So, and it's nice. You get to trade with a lot more focus. Would be, I guess, the easiest way to put it, because you can focus on what matters, which is trading well, and not simply trying to trade to make money, but trading to trade well, so that way you're really holding on to everything. And like I said, we have a very explicit number that came out of the Fed funds announcement earlier. 6.5% being the magic number on the employment rate. I talked about that a little bit earlier, and they said that basically is when they may start to lighten up on their easing measures. And we, as you know, the unemployment rate has been dropping down, and we had that trade that came out. Let's see here last week, where the announcement was made. Let's see, got it. We had the non-farm employment change, or the unemployment rate dropped down to 7.7. So if it keeps ticking down, hits 6.5, then they've actually at least given a number now. Of course, nobody knows when that number will happen, but at least they've given a specific of when they may start to back down. Now, what that means, who knows? Does that mean they raise the rate? Does that mean that they stop buying bonds? Does that mean they cut the bonds in half? Does that mean they'll say, hey, for at least the next 6 months, we're going to keep the rate the same now instead of for 5 years? So nobody really completely knows what that number means. They're just saying we're not doing anything until that happens. So now they can peg it to the unemployment rate has to get down low enough instead of just simply some pie in the sky thing. But in reality, they haven't given you anything, because nobody knows when that number is going to happen, and also nobody, and of course, they can manipulate that number, and nobody knows what they're going to do at the end, even when that number comes out. It just means that's when they'll really actually start looking at accommodation. So before, they haven't really done anything like that. They've issued it out to 2015. So instead of doing a target on time, they actually gave a target on a reported number. So an interesting way to look at the market. And then they'll definitely have to figure out how to do their balance sheets and bond buying and interest rates and all of that without trying to cause some sort of either hyperinflation or trying to cause a major depression from their own fiscal cuts, so their own fiscal cliff, right? So let's see here. Let's check out what we got on the deviation levels. And like I said, you can get access to all of these inside the member diagnostic area there on TFNN.com. But if we go on over, let me log on in, and I'll check that out. I'll show you exactly how that works. And we'll go ahead and pull them up. And they are very accurate and very helpful. And let me log in right now. I will pull them up for you. And we'll get in and see where the levels are at the moment. All right, so here we go. And now they update live, too, which is nice. They actually update every night on their own. And so we're going in, checking this out. And we are working even on releasing an indicator that will draw them for you on a chart. So pretty cool. And so right here, hopping on over, looking at the S&P. So the S&P, we had an expectation of 1437.7, then up to 1440.2, then up to 1443.9 on the day. Well, it hit the 1437.7, so you can see I hit that right in here. And so now we're waiting on it to hit a possible 1440.2 for the day. But at this point, you would have looked to tighten your stops. You may be out of the trade by this point. Like I said, I got out right here around 1150. So that's pretty much when I decided, hey, the thing's done. It's cooked. It's over. Going over, we'll check out the NASDAQ. The NASDAQ, we were here a high of 26, up to 26.99. We got close. And we did actually, let's see, hit that, the first thing this morning? No, not even this morning. So let me turn on the overnight rate, too. I need to have that on here so that we're seeing all price action for the day. And, all right, all the information there. So about 26.96, so just, a few points off. And, but, I mean, it did hit it, and then it dropped on down. Let's see, how low did we go? We went on down to 2673.5. We did expect a low of 2673. So it stayed within about 2 points of the high on the deviation and about half a point of the low on the deviation mark for the day. And so either one of those levels, you're getting ready to tighten stops. Look over, we'll check out the Dow. The Dow right now, we hit a high just recently. We got up to a high of 13,326. We expected first level to be at 13,330. So pretty amazing. Even with the day that we have, with the Fed funds rate coming out, I mean, these are still half deviation moves. These are not, this is not spectacular movement. I mean, it feels huge, but it's really is not a big move. All in all, I mean, you're talking, 50 points, on the Dow from, close to the open there. So not just a major thing. This is a pretty massive thing going on right here, but, it's a major announcement, but in the end, that's just not a massive move. And a lot of that's because that move's already started the previous day, and it's just been, moving up. But just on the day itself, didn't have just a massive move. And then hopping on over, we'll check out the small caps, and the small caps at a high overnight of 838.4. We expected it. Honestly, let's see here, 842.5, and it had 838.4, so it didn't even go up to half a deviation. Now, on the downside, let's see if we even got a half deviation down. Well, 833.2, 830.5. So, really, I mean, we're going to see what Bernanke's announcement does. Maybe that's going to be what takes us on over to, past the half deviation levels. But not just an impressive day on the indices themselves. And that's one of the reasons I actually focused on gold, because I've noticed lately on the Fed funds rate that gold is definitely a better mover, obviously being directly tied to it, because it's basically how many dollars are worth an ounce of gold, right? Or 100 ounces on the futures market, but it's priced per ounce. And then 1.366 on the low side on natural gas, 1.372 is where we said we would have tightened our stops. So right here, you would have been tightening your stops. And when you did, it would have came back up. You'd have been glad you did. It basically filled the gap, you could say. And then it's moving on back down and pushing back towards that half deviation level again. Looking on over at oil. Oil has had a nice move today, and also heavily impacted, of course, by any kind of news announcement like the Fed funds rate. It's moved on to a high up to 87.68. And we expected 86.55. Then if you got in again, 86.86. And then basically we expected the full move we really expected is 87.32. And it hit basically 87.32 right here. And that's where you're saying tighten all stops. The horns start going off. It keeps moving up a little bit. You tighten your stops, and you're very glad you did. That was a full one deviation move right there on oil. And hopping on over and checking out gold. Like I said, gold we did expect a nice little move on. And it did get up to that deviation move. We expected it to get to a high of 1723.3. And it moved up to 1725. So right here, so when it hit it, boom, stopped, turned around, went back, and started giving it all back. And so that one deviation move, I mean, any more than that is just gravy. You're not expecting it. That's why you're tightening your stops. And, right there, 11:50. It's about when I got out. Like I said earlier, got out about 10 minutes before the show started here. And, 11:50 Central Time, 12:50 Eastern. And that's when at one deviation, be very happy. You make one deviation moves on a consistent basis, you're a very happy trader. And 33.875, so 33.87. Now this one moved. It moved to a deviation and a half. So 33.49 was the expectation. Then it moved a little bit, so it hit that right there. Okay, that's a one deviation move. Then it moved on up to 33.73. That's 1.5. The next level would have been up to 33.97. It was pushing for it. It didn't quite get it, but it was pushing for it. That would have been a two deviation move. Silver, big mover for the day, but a great stayed right within its deviation level still by the end there. And then looking on over, checking out, we got silver, we got gold, let's check out some copper. So copper right there moving on up to a high of 3.721. The floor is now closed over there with 3.721. And looking on over at copper, we expected it to get up to 3.725. So would have been the 1. And then 3.71.2 would have been the 0.7. So we're tightening off. So 3.712. So right here we're tightening. We're waiting on it to get to 3.725. Doesn't quite get there, but pretty close. I mean, you're talking 0.5 away from my full, 1.5 away from a full deviation. So very, very, very close. Move to a full deviation on copper. Why are deviations so important? Why do I go to these? These are expected moves of the market. This is not pivots. Okay, this is not somebody's pivot levels. This is not somebody's standard deviation levels. This is not some basic mathematical calculation based on yesterday's movement of support and resistance. Okay, this is about one thing and one thing alone. This is about the market's expected move on the market. That is it. All right. And what we're doing is we're taking the implied volatility, the expected movement out of the option pricing over 4 months, 4 options out of each contract month, if available. We're taking those 16, we're making a unique type of volatility index for each one of the markets, and then we're putting that number into, okay, the deviation formula for a short-term deviation trade. And so basically, how far does the market expect the market to move today? And that's why they're so accurate, because they're not some past historical calculation. They're not some indicators trying to make up the future. They're literally just, how far does the market say the market's going to move today? Well, that's where I should set my profit targets. Okay, that's where I should stop getting into trades. Okay, if it's hit the -1 deviation, I shouldn't keep adding on to my shorts. If it's getting close to the 1 deviation, I shouldn't keep adding into my longs. I should be taking my profits or tightening my stops. So it really helps you with profit management. Helps you not have those winners that are really going turn into losers. And it helps you get your greed in check. And also, I mean, the numbers are in front of you. There's no interpretation. Like, here is the number. So there's no way to mess that up, you know? And then, I guess there's always a way. But the number is right there in front of you. So it's in black and white, literally. We hop on over to 719 was the move on corn on the downside. And we expected it to move to 1721.1 and then down to 1718.2. So it hits 1721 right here. And so we're tightening our stop, and it moves on a little bit further. Doesn't quite hit the 718.2. Pulls on back, but gave us a great take profit, tightening the stop on the high of that bar right there. And then hopping on over to our soybeans. And again, when I'm talking about diagnostic deviations, I'm going into the statistical part of trading. Most traders use technical, some use fundamental, a few use seasonal, and very few use statistics. And you want to use statistics, and that's what it's all about with diagnostic deviation levels. And we're going up to the high side here, 1478.75 on the soybeans. And we almost hit a half deviation. Not a big move right there. What about on the downside? The downside of the low, 1457.25. We did actually move down pretty good. We moved down almost to a 1 deviation, almost down to past a 0.7. So on the downside, you've been tightening at 1462.9, then at 1459.3, and then looking for 1453.8. We didn't quite hit that, but on the 1459.3, that you hit right here in this bar, would have been a perfect tighten on the stop before it moved back up. Basically filled in the gap for the day and then, oscillated a little bit up. And then moving on over, checking out a few of our currency pairs. So we had Aussie dollar taking on up all up to 10.0585. And 1.0585 would have been a 1.5 deviation move, 1.0583. So 1 was 1.0566. So right here, it's like, hey, tighten your stops. So boom, you tighten your stops. Flies up even further. Hits a 1.5 deviation. You tighten it again, boom, you're stopped out. Great Aussie dollar trade. Hopping on over, checking out pound dollar. This one was just setting up this morning, looking beautiful. I went ahead and I actually bought it at 10 o'clock Central, 11 o'clock Eastern time. Looking at this trade, this is a signal. And as it popped on up there, and we'd have to move on over a little bit tighter. We'll go into, let's see here, 10-minute bars. And so it pulls down and pops right on back up there after hitting on this major support level. And when it did so, it moved on up to 1.6170. And that was a level of 1.6178 was 1.5. 1.6158 was 1. So 1.6158 right here hits this level. You tighten it again. Again, it falls right back after hitting that 1 deviation. So over and over and over again. So stay there, folks. We'll rack up with euro dollar and do a market wrap on the day.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Last one we were wrapping up there before we took a little break for the commercials was the euro dollar. And over on euro dollar right there, we can see it flew on up on the announcement. We got up to a high of 1.3097. And on the euro dollar right there, 1.3097 was just past a 1.5 deviation move. Seeing that pretty consistent across a lot of the FX pairs right there. 1.3094 was 1.5 deviation. A full deviation was 1.3064. So we actually hit that in this bar right here. Tighten the stop. Comes down. Tighten the stop, hits 1.5 deviation, tighten the stop again, and we're done on euro dollar for the day. Or you may even say for the moment, because we do have a couple big announcements coming out in the next 20 minutes that could push it higher or lower. At this point, you may just be happy with the profit and decide to walk away, or you may decide to hop in on another trade, definitely take some profits or tighten your stops so that way you're not giving them up if the market does fly back in the other direction, or put on another straddle right before these next announcements do come up. And so with that wraps up the euro dollar. We can check out a couple other pairs real quick. We got the U.S. franc. I talked about some U.S. franc reports coming out. And U.S. franc dropped on down to a low right there. We got a low of 0.9243. And that one actually was also, that was almost actually a 2 deviation move. 0.9248 was a 2 deviation exactly. So right here was 2 deviations. It hit the 1 deviation of the U.S. franc, which is 0.9285. So right here And you can see how it stopped at 1 deviation. I mean, it literally just chilled out, pulled back, and it actually broke through that level. So if you were able to, if you took that trade, congratulations. That's pretty impressive. I would have been out right here, but it did go ahead and fall back down. If it did go back down that 2 deviation, then it did give you another take profit, and you could have taken another deviation bite out of the market right there. And one of the trades that I know a lot of people do is they'll go in on these deviation levels, and when they hit a 1, they'll actually put on a straddle. And so by doing that, you can actually take advantage if the market does fly up or down, because you don't expect it to go much further. But just in case it does like that, that's a way to take advantage of that as well. If you're not doing a reversal, you can do a straddle. And then looking at the U.S. franc, so let's go ahead and check out USD yen. So on the yen's climbing on up there. We can see it move on up to 83.28. And 83.28 would have put us right at also a 1.5 deviation like most of the other currency pairs there. 83.18 was 1.5. 82.96 right here was that we literally just hit the 1 deviation marker right here, and it busted on up higher again. You tightened it up, so probably would have got out right here. Doubt it would have got back in. Would have been pretty crazy to do so. You already took a half deviation out of the market. And then wrapping it up right here at USD CAD. So on the USD CAD here, we got the Canadian dollar moving down, almost pulling back down to one of the big fib levels there, but 0.9825. And 0.9830 was 1.5 deviation, so it also moved 1.5. So you can see a lot of these will move in lockstep. All the currency pairs sort of hitting that 1.5 deviation mark across the board, and this sort of putting it all together. So, but anyway, so we got all those levels put together, and just an interesting day overall in the markets. So definitely get ready. We got a few more reports coming out here in a few minutes, and 15 minutes we got 18 minutes we got Bernanke's report coming on out. And let's go ahead and do a market wrap for what we got left here for the day right now, where everything's sitting after that main announcement just came out. We got the S&P sitting up 5.25. We got the NASDAQ up 3.25. We have the Dow up 31. We got Russell actually down $1 on Fed Fund stimulus announcement. We got, what does that tell you? Be leery, all right? We got gold up 6 points. We got copper up 0.78. We got silver pushing 2% right now. We got corn is down a few bucks. We got soybeans up $5. We got oil up over $1 right now. Natural gas down to 1%. Euro dollar at 77. Pound dollar at 44. Aussie dollar at 40. Aussie yen up 66. U.S. franc down 55. And U.S. Canadian down 23. All right. Trade safe, trade smart, trade wise, trade Nadex. Check it out. All right. Y'all have a great day. Bye.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.